The Treasurer has defended Labor's economic management after a new economic report predicts a budget deficit of $33.5 billion. Deloitte Access Economics has forecast the most severe deterioration in the budget bottom line since the COVID pandemic. Joining us live now is Deloitte's Stephen Smith. Stephen, good to see you this morning. Thanks for your time. So break all this down for us, if you wouldn't mind. How major is this slump?
Good morning, Pete. Well, the first thing to note is that the budget already expected that the deficit would be reasonably significant this year. In 2024-25, the budget was expecting a deficit of $28.3 billion. We've got that worsening to 33.5, as you say. And really, there's two key factors there. The first is on the revenue side. We've seen commodity prices not outperform, unusually, the conservative assumptions that Treasury's built into the budget. So revenue write-downs will be a feature of the budget in 24-25. On the other side, spending's picked up. We've seen some spending carry over from the last financial year into this financial year, but we've also got an election coming up. So less revenue, a little bit more spending. That means the budget bottom line is going to be worse this financial year.
In your experience, how significant is that turnaround, though? As you mentioned there, it has worsened.
In nominal terms, this is the most significant deterioration in the underlying cash balance that we've seen outside of the pandemic. So 2019-20 is the record year, and of course that was affected by the coronavirus pandemic. Outside of a crisis, and certainly outside of that year, this is the most significant deterioration in the budget bottom line that we've seen. In the last decade or so, budgeting in Australia has been really a case of assuming conservative commodity prices and then, unveiling these surprise revenue windfalls when commodity prices do better than expected. Unfortunately, we're not seeing that this year. China's slowing, commodity prices lower, and so we've got this big deterioration in the budget bottom line. So
who or what is to blame for this?
Well, rather than blame, I think this is more the economic reality. The last couple of years we've seen surpluses, but what this financial year is showing us is that those last 2 years were really built on good luck rather than good management or reform. High commodity prices are great when they happen, but when they don't, you sort of revert back to the difference between underlying spending and underlying revenue, and that's what we've got in Australia is a structural budget deficit. So what we need in Australia is better fiscal policy, better economic reform and tax reform to get the budget into a more sustainable position over the longer term.
So as we get closer, an inch closer to that federal election, what sort of message should this send about potential cost of living handouts?
Well, I think the government's going to be very careful anyway, but certainly there's not a lot of room to spend, is what these budget numbers are showing. And there's not a lot of room anyway, given inflation still hasn't returned sustainably to the RBA target band. And so, that's an environment where the government does need to be careful. It's not pumping too much money into the economy. That's a very tight line to walk for the Treasurer or the government heading into an election. They're obviously going to want to spend and make promises. The economy isn't in a position where a big boost in government spending is really feasible. At the same time, the budget's not in a position that it can afford that either. And so it's a really difficult balancing act for the government coming up to the election.
Stephen Smith from Deloitte. Appreciate that, Stephen. We'll talk to you soon.